I want to begin today's discussion with this short case scenario. You have been busy nowadays doing a lot of research on stocks. You went to one of your favorite websites and received a great recommendation from a seasoned and experienced trader about a great company. You also did your little research and finally decided, this is it. You believe you are 100% on point when it comes to this stock pick. With great excitement, you quickly go into your broker's website and log into your account. The moment of truth is now here. But wait, don't push that button yet. Something is missing. Yes, got it. Plan to trade, don't trade to plan. Plan to trade, don't trade to plan. Let's look at the various steps before you buy a stock. When I say plan to trade, what I mean is following the steps I have listed on the screen from top to bottom. Let's go ahead and do that. You have a stock you want to buy. The first thing you have to do is to decide what price you are going to purchase this stock. You can use the stock chart to help you figure out the best price level to enter the trade. The second factor to consider is your exit point. When you buy the stock, at what price are you willing to cut your losses in case your plan or strategy fails and the price of the stock begins to tumble? One thing that every successful trader is good at is taking profits. When this stock price begins to go up, what price point are you going to pay yourself? Very important to figure this out. Next, we all have limited cash resources. Before you quickly push the buy button, decide on how many shares you want to buy. Let's say you decide on 1,000 shares. Are you going to do accumulative purchasing by averaging down, or you want to buy all the 1,000 shares at once? You can use different ways to figure out the amount of shares to buy using the stock chart or loss per share. I talk more about this in the stock market immigrant's guide to success course that I have put together. The greatest and the most important point on this slide is timing, timing, timing. You may be right on your strategy. You may be right on picking the stock. You may be right on everything else. But if your timing is wrong, it can change a perfectly researched and great potential stock into a nightmare. Finally, you can now push the buy button and purchase the stock. Let's see how we can briefly apply plan to trade. On your screen right now is the stock chart for United Airlines. Let's assume I have done all my research and have decided to purchase this stock. First, I have to decide my entry point. Pay attention to the bottom part of the chart. On June 22nd, you see that? June 22nd, where you have the blue arrow on the chart. The price is $35.23 right here. $35.23. Looking at the chart, the price seems to be coming down. See the red candles? These red candles right here? That shows the price is dropping. The price was $40 here, and it has been moving down gradually. What you do now depends on your strategy. But for the sake of this discussion, let me stick with using support to guide me enter my trade here. Let's look at the $30 level on this chart. You see the blue line right there? Without going too much into the technicalities, you can see that there are a lot of candles touching this price point. Over here, over there, over here, and over there. You see that you have a lot of red and black candles touching this area. This makes this $30 price a major support area. I will therefore wait for the price to continue its drop towards the $30, say $31 before I buy. So we have the price $35 here, it's dropping. My entry will be towards the major support area around $31. I will quickly then set my stop loss depending on the strategy I am playing. If it's a day trade or short-term trade, I will place my stop loss below the blue line, say $26 here, and set my profit taking around $39 when the price is approaching this $40. And I'm not picking these numbers at random. The chart you see is guiding me to pick these numbers. The 39 price is the price when the stock price is approaching a resistance at $40. So I want to take my profit before we get to $40, which has a high potential for the stock price to retreat. And this depends on the strategy I'm playing. If it's a day trade, this is what I'm going to do. If it's a long-term trade, that is a different matter. But for the sake of this discussion, let's assume I am doing a day trade. I will then use the loss per share amount to calculate the position size or the number of shares I have to take. Now, the greatest factor is upon me, timing. Remember the stock webinar we did about the lion and the deer? If you were not on that webinar, you may go back and watch it. But simply put, time your trade well, taking all factors into consideration. Lastly, I will now push the buy button to buy this stock. Think about what we just did for a minute. You now have a solid plan. Regardless of how the stock behaves, you will not panic because you know what to do in every case scenario. If some of the terms I used here is over your head, do not worry. The intent or goal here is for you to understand that you have to plan before you buy a stock. Great. Let's move on. Let's now turn our attention to trade to plan. Trade to plan is a backward implementation of plan to trade. What do I mean? With trade to plan, a trader buys the stock first before they think about timing. Oh, I should have gotten in around this time or that time. They continue by thinking about the amount or number of shares they should have bought. They then randomly buy more stocks and add to what they already have. Next, they think about how they should cut their losses. When the price begins to fall, they are caught in a dilemma. Should I buy? Should I sell? Should I wait? what do I do? Is the price going to turn back up or is going to continue going down? Lastly, they now try to figure out what was the best price they should have purchased the stock. You see the problem here? You have already purchased the stock. You own it. It's sitting in your portfolio, staring at you, and you are now asking what was the right time to buy certain number of shares. Whilst in the trade, you now try to figure out what price you should put your stop loss order or cut losses, and then you continue thinking about the best price you should have purchased the stock. Ask yourself, are these questions relevant after you have already bought and the stock is moving so fast? Will it be the right time to be thinking about these things? Great job if you said no, because the answer is no. This is the most terrible way to trade, and I can tell you, more than 80% of retail traders and beginners made this mistake and continue to make it all the time. You have now seen the two ways you can use when purchasing a stock. It's now time to decide. Are you going to behave like the hunter, or you want to be the hunted? The decision is yours. I hope you have learned one or two things, and the floor is now open for your questions. Thank you for listening.